Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, October 19th. Great to have you join us once again. Thanks for making us part of your day. I'm your host, Jesse Allen. Thank you so much again. Find us online, markettalkag.com. That is our home on the web, markettalkag.com. You can find all of our streaming sources and more right there. Well, we got a lot to talk about in the market trade today. Soybeans were the leader on the grain side in an otherwise quiet session. Let's bring in our good friend Brian Splitt with agmarket.net joining us this afternoon. Brian, it's great to have you back on the show, sir. How are you?
Doing good, Jesse. As always, thank you for having me.
I appreciate you joining us, and we got plenty to talk about, as I mentioned, and let's just start up front with that soybean market today. There's a lot of talk out there about these edible oils, this renewable diesel, all these different biofuels that are going to go into soybeans and made out of the soy complex and everything else, and yada, 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 and that seems to be what the driver was today in this bean market, was the edible oils and the strength there. What do you make of that? Is that what you saw? Talk to us about your thoughts on the soybean market after Tuesday.
Yeah, Jesse, there was a story that was picked up by a few publications, and these are comments that were coming out of a conference in Geneva. Essentially, the idea that with the additional biofuel demand that we're going to see based on President Biden's initiatives, that we are going to be severely short on soybean acres. And the suggestion is to the tune of about 40 million acres. And I don't know if that is correct or not, but you know what? If that is the case, when you think about the ability for the U.S. producer to generally get maxed out around 180 million acres between corn and soybeans, that is going to be a big problem. And the other part of the issue is that we cannot allow imported foodstuffs to make that biofuel. So this has to be domestically produced soybeans. And so this just really raises a big glaring question of whether this is even possible. Should we even be considering this as something that could potentially develop over the next few years? Now, Rabobank had come out with a story a couple days ago, and the general gist of that was, you know what, we need about 3 million acres more soybeans next year to meet the demand that we think is coming. And so, it's our position at agmarket.net that those acres have already been bought just based on the concerns about fertilizer for corn production. When we look at recent values near $12.50 to $12.80 on new crop soybeans, and comparing the revenue of that to 5.25 corn, for example, a lot of producers have suggested that they'll be soybean heavy next year. So the ongoing big picture is where it's really at. Now, it's interesting, we talk about the biofuel and the bean oil being really what should be the strong part, or the strong part of the soybean complex on headlines like that. And it was actually the exact opposite. We had soybeans were firm today. Soy meal was very firm, and oil was positive, but definitely was not the leader today. So there was actually a little bit of an unwind in the soy oil, soy meal spread.
Well, I'm just very curious. A couple things you mentioned there. It almost feels like it's a buy the rumor situation with all this talk about needing more of these soybean acres. But yet it's something that we know it's going to be a couple years down the road before we're really looking hard at this. It's got to be developed. But to me, it just wonders if, okay, is this the quote unquote reason why we might put a little bit of a premium back into this soybean market after we saw the bearish reports here from USDA in recent weeks?
Right. And so what I can tell you is that technically, so relative to the chart, November soybeans had a very major low made last week at 1184.5. And that level was a retest of lows that were made on the March 31st quarterly stock report at 1184. So from the 10,000 foot view, if you just look at a soybean chart, and we did see soybeans bottom from that level, it would look obvious after the fact. Now, what we also are contending with right now is the fact that soybeans on this bounce have recovered about 50 cents from last week's low. We've come back up and got near the downtrends that are in place from the September 30th quarterly stock report, where the market rolled over. And July soybeans, for example, went up and hit the 200-day moving average and backed off from that. So I'm really just going to use the chart as the guide. I think if we can get the soybean values to get back above the 200-day, which has been an extremely important level of support until we broke through that, I think that could bring in some additional technical buying. But until that happens, it looks to me like we had a good recovery from oversold conditions. We had a good recovery from a major support level. And now we really need to see if the soybean market can push through resistance on that bounce.
Well, on the flip side, let's talk corn, Brian. And today I know we tested that 50-day average again and failed. And looking at this corn market, looking at the futures side, we're just kind of very quiet the last couple of days. We had some good export inspections on Monday, supportive to the corn market, but overall, we've just kind of found this range once again after the reports. What are your thoughts and what you're seeing with the charts on the corn side?
So you'd mentioned the high today. That was also a retest of what could be a potential left shoulder on the corn chart. So we had a high a few weeks ago at 537.5. Today's high was 537. That did jab through that 50-day moving average, which sits right around that 535 area. We did close back below it. So at today's high at 37, with the other high at 37.5, that would be your left and your right shoulder. In order to validate that pattern, we would have to then take out the 507 or 506 and 3/4 low that was made on this last downturn. If you do that, that would actually measure another 30 cents lower from that 507 level, which then takes you to 477. And guess what? We have that gap to fill from the March quarterly stock report where we were limit up at 477.5. So I was a buyer of some $5 puts today for under 4 cents just to see.
Well, and that's a great question. That leads me to what I was going to ask you next. When we look at where things stand in this corn market and look at soybeans as well, I mean, are puts a good strategy if I want to protect my floor here right now? What would be some things I could look at if I'm a grower and looking at my marketing right now?
Well, it really depends on what the producer's plan is and what's important to them. A lot of producers really seem to not want to sell any additional bushels if they don't have to, and they're avoiding additional income. If that's the case, then it might be a wise strategy to use the carry in the market, implement some hedges in the March contract using some options, put a floor under the market, maybe look at a call up at the $6 level to help finance that. When we did have the USDA drop yield in August and they dropped it more than expected, March corn made a high of 599 and 3/4. So we could use call values up in that 580 to $6 area to help finance puts if that's the case. I think something else that producers are going to be wanting to take a look at is the potential for additional basis appreciation, and you won't be able to get that if you sell your physical. Board ownership does not have any basis appreciation. So if producers are putting bushels in the bin looking for better basis down the road, it does make sense to use options to provide a floor while you're doing that. Now, if a producer does have some bushels that they are thinking about selling this fall, maybe these are overage bushels that they just don't want to store, definitely don't want to pay somebody to store the bushels for you, then I think it makes sense to make that sale, then find a strategy on paper. I think you just go all the way out to July, find some kind of a call spread. Maybe you're looking at a 560 versus $7 call, something like that. And that'll allow you to participate in a bigger picture, longer term move to the upside, whether it's spurred by the balance sheet or just a general rising tide lifts all boats type of play on inflation.
Well, Brian as well, and I know, I believe your group has talked about this, and I know other folks have as well. Looking out at 22, looking at next year's crop, there's some guys who are looking at price levels, whether it's corn, soybeans, the big two, and they're making some sales there as well, looking out to next year's crop.
That's right. So just a recap of where we are for our official recommendations. On December of 22, corn, we did implement our first 5% of the expected production at 515. That's either with a sale or some kind of a hedge. And then the second 5% was done at 530. So we are considering ourselves 10% sold slash hedged, depending on what type of strategy you utilize. On the soybeans, we've been more aggressive. We did do our first 20% of new crop soybean production at 1260. And shortly thereafter, and really looking at the fertilizer values and how we feel that would shift acres next year, we did suggest another 30% at that 1260 level. So we are 50% sold slash hedged on beans for next year. And I do think that if we do have a decent setback in values, we will look at some kind of a paper position to cover those sales.
A lot of things to consider in the corn and soybean commodities here moving forward. Wheat, Brian, wheat was quiet today. Spring wheat saw some more strength there. Chicago, KC, we're just right around the unchanged mark today. But I know wheat, a lot of folks been talking about that, pricing itself out of the feed bunk, trying to. There just seems to be a lot of stuff going on in this wheat market right now.
It is, Jesse. And if you look at the reports that we've gotten over the last couple months, most of the good news has been regarding wheat. We've seen some bearish data for corn. We've seen some bearish data for soybeans. But the wheat story between the three of them has been mainly positive. So that has been our contention, that wheat needs to continue to price itself out of feed rations. We've had some conversations with producers in Arkansas, for example, that with the ongoing wet weather they're having, we're questioning whether they'll be actually able to plant the wheat that they're intending to plant. So that's a situation that we're monitoring. We did have new crop hard red wheat make a new contract high today, just above 750 a bushel. So this market has support under it. We look at that spring wheat new contract highs this week as well. And it seems to be right now that, if there's a bullish story in the overall ag commodity complex between the row crops, we're really focused on wheat at this stage.
Brian, let's flip our conversation over to livestock today. Hogs had a setback. They had been strong to start the week, and then we come back in with triple-digit losses here today. And really, just looking at this hog market, it's kind of been up and down. And we saw cutouts. We saw a decrease in bellies, increase in hams today. It seems like a lot of selling pressure, a lot of things to look at in this hog market. What are your thoughts there?
Jesse, we have a gap on the December lean hog chart, and that's still something that I think the trade wants to fill. That is at 77.20, and I didn't look before we started this conversation, but last I looked, we were very close to filling that, but hadn't quite filled it yet. I think that's something that the trade is objective number one on this down move, is to fill that gap, and I wouldn't be surprised if it went through it a little bit more to the downside, but we do now still have a gap above the market. That's up in the 81 area. I do think that once this market decides that we found support and find a short-term low, we'll try to go back up and fill that contract gap before expiration. And that could give us a 4 to 4 cent plus per hundredweight move to the upside, assuming that we fill this gap and then make the turn.
77.40 was what we closed at today, so pretty close to that 77.20 gap. And we think about, we get into the fourth quarter as well. We look at retail demand. I know there's a lot of folks that are getting that sticker shock at the grocery store right now, whether it's for pork, whether it's beef, you name it. And with the inflation play out there and everything else, and one has to wonder, will we see any of that holiday demand pick up here in the hog market? How will that affect things moving forward? I think that's a question that remains to be answered, Brian.
It is, general demand overall. We look at, as you mentioned, the sticker shock, and here's the thing, right? So there's not a sticker shock in the futures market. The sticker shock is on the retail level. And so, that's been a major frustration for any livestock producer, is watching the product go off the shelves at such a high price and looking at the value that they receive at a level that doesn't seem to coincide with that. And that's something that we continue to need to see the policy drivers work through. But, mentioning the live cattle market, today we went up and we made a new high for the move. We continue to fail at the convergence of the 100-day and the 50-day moving averages. A little bit of an outside day down today. What was the settlement price on the December live cattle today, Jesse? Can you see that?
130.02 was what it settled at today.
Okay, so that was a close one tick below yesterday's low of 130.05. So that would give us an outside day down. That might give us a indicator that we have hit a short-term high on the live cattle futures. We are overbought. We've really just been struggling at this area. So I think if we see some follow through below 130 tomorrow, that would suggest to me that we have indeed made a short-term high, and we're likely to retrace some of this nice rally that we've had off of recent lows.
And I wonder if we retrace some of that. We have a cattle on feed report coming up on Friday. One has to wonder how that will impact the cattle markets here as we get. We probably won't see much of an impact this week, but might see that happen Monday, depending on what the report looks like.
Yeah, and it's hard to say ahead of time how the market will react, either in front of reports or afterwards. There's a reason that they have that saying, "Buy the rumor, sell the fact," or "Sell the rumor, buy the fact." And if that is the case, could we see some selling in live cattle leading up to the cattle on feed report, anticipating potentially some negative numbers, and already have that priced in by the time the data comes out? So we'll see.
Yeah, we definitely will. Brian, let's talk outside markets here as well, real quick. And I know, we talked inflation. We mentioned it a little bit. Been watching the dollar, been watching crude oil. You mentioned fertilizer prices a couple of times. All these other factors outside the general commodities, ag commodities. What are you seeing out in the outside markets of note here today that you're really keeping an eye on?
I think a lot of people are really trying to figure out the U.S. dollar and what the next move is. There's been some recent strength in the U.S. dollar relative to where we've been over the last few months. We did get well above 94 here on this recent bounce. Last month's lows were just below 92. We started October near last month's highs, and we've been on the decline since. So that would suggest that maybe if we can't get through last month's highs, we might just go recheck last month's lows. Again, that would be a move down towards 92, and we're in the mid 93s right now. If we do that, that might bring in some additional short-term support to commodities. On a bigger picture sense, we had an awful lot of buying in the ag commodities last year. Again, China was the main buyer and driver of all of that support. So when you think about, is the U.S. dollar having an effect on Chinese buying, I don't think that's the thing driving their decisions right now. If you really look at where the dollar is versus this time a year ago, it's practically the same spot. So if they were willing to do their aggressive buying this time last year with the dollar at these levels, I don't see why they wouldn't be willing to do it this year at the same levels in the dollar. So that tells me that there's other things going on besides the dollar that are driving those decisions.
Brian, great stuff. Great analysis as always. Any other final thoughts you have for us? Anything you want to reiterate today?
Again, we're planning right now. We're planning for what to do with bushels in the bin. We're planning on what to do for next year. And all I would really say is that if you feel like you need some help with that, call somebody, call some of us on our team, call somebody else at another team, wherever, but just get some help. This is a difficult job to do. Producers are in the field minding the crop that they're growing, and it's hard to just juggle all of these balls by yourself. So if need be, you can reach anybody at the Ag Market team at 844-4AG-MARKET. So that's 844-424-6758. You can reach me directly at 815-665-0463. And I would encourage you to take a look at our app, www.agmarket.app. And you can use that for 2 weeks to see if it's something that you feel might help you out with your marketing.
And you can also find out more. Agmarket.net is their website online. Brian Splitt with agmarket.net. Thank you so much for joining us on today's edition of Market Talk, and we will talk to you again soon, sir.
Thank you, Jesse. Appreciate it.
Brian Splitt with agmarket.net, our guest today here on Market Talk. That's going to do it for the Tuesday, October 19th edition of the show. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.